morning. Stocktwits Nation, it is Thursday, April 17th. It's a short week. The markets are closed tomorrow. I'm here, as always, with Shay Boloor. Shay, what's good? How are things in LA today?
Good. I am looking forward to a long week. I think everyone is. There's some exhaustion being had right now from the whiplash of news stories, the volatility. So, I think everyone is welcoming Good Friday. So
Yeah.
I'm here for it. As a non-Christian, I'm very stoked that this holiday is around the corner.
Yeah, I agree, and I think we need a little breather before all of these earnings coming next week. Of course, we were just talking about Netflix though, because they are reporting after close today, which is weird, right? Because then there's going to be 3 days off. What do you think happened there?
Someone effed up big time on their IR team because this is my 2 cents of what happened working on the other side of the corporate world. Management wanted to be the first big tech company to report their earnings this cycle, and Thursday's always been the prime time to report earnings during a week. So maybe the IR person or just that team saw like no real big tech is reporting this week, but next week it's a ton of companies reporting. So like, all right, well, let's do Thursday. They didn't look to see that markets closed on Friday. So huge error on their part is my 2 cents. And I think that you should not read through of, oh, Thursday afternoon prints, like it's gonna be a bad print. So they're trying to mask it with like 3 days off so people forget because you never know over the weekend some tariff news will hit. It's not that. I think it was an organic mess up and interesting if they make any like, commentary on that. I don't think they will, but that's it's one that is rare in a company that's a mega cap. It's really rare to see that kind of slip.
Yeah, I mean, hey, we're all human. And to your point, my brain went to, ooh, like, is this going to be better than expected? What's the play? And you're right. Sometimes there is no play. It's just like, oops. So I guess we'll see if anything happens. I think you stream that in Stocktwits. Also, they do their earnings calls with YouTube videos. They're pretty modern in that way, so you can watch there as well. Let's check in with some of the headlines today. It's been quite a week. I think the big story this morning, somebody woke up on the wrong side of the bed. Donald Trump going after Powell on Truth Social. The girls are fighting again, as I like to say. He kind of tweets or posts as like the way I do towards Bravo celebrities, where I think I'm just like sharing my opinions into the ether about things I really can't control. Although he has a little more sway than I do, but he basically said he can't wait to get rid of Powell. He has a new nickname for him, Too Slow, which I think that nickname goes very hard. I think that is a cool nickname. Like Shy, like if someone called you like Too Slow Shy, that's kind of badass, right?
Yeah, I mean, I think a better nickname would be Slow Mo Po. Um, that so I don't know if maybe we can like start calling that,
TM.
maybe make some T-shirts, but I do think that like I don't know, like the Fed's stance has always been data dependent, so it's always somewhat backwards looking because they need to see data come in and then reflect. But usually when the data is being reflective of what's happening in the world, they're a little late. And I think yesterday was I think Trump has the right to be upset with Powell because and I also think I think both sides are right. Like imagine if your boss told you we want you to keep doing some good work this year in 2025, but like, I don't want you to think otherwise that you're getting fired next year. You will be getting fired, but I want you to keep doing my initiatives, keep working hard to fulfill my vision of what I want, but know you're on rental borrowed time. Like,
Hmm.
that's why I think no one should expect the Powell to step in and rescue this market this time around with the Fed put, you can call it, because no, Trump is making it clear he's going to replace Powell next year. Um, and there's no political cover. I don't think there's any kind of incentive on Powell's part to take any bold action. So, what's the result of that? We have a lame duck Fed caught between tightening global regime shift and a domestic policy agenda that's clearly being written on the fly week to week. So, be cautious out there. The Fed is that was the most hawkish I've heard Powell speak, honestly, since Jackson Hole a couple years ago. That was a really, really bearish tone yesterday.
Yeah, I mean, it's also just the drama. Like Trump appointed him. Like, what fell apart? But yeah, I was like, wait a minute, isn't that your guy? But yeah, like things happen, things fall apart. So, and we're also watching the markets yesterday when Powell was speaking, and it was just ticking down and down and down in real time, which is always
Yeah.
interesting to see the live reaction. Breaking this morning out of Europe, the ECB cut its key interest rate. That's most people were expecting that. They cut it by 0.25 percentage points. That's now down to 2.25, seventh consecutive reduction to support the Eurozone economy. They cited quote unquote exceptional uncertainty due to U.S. tariffs, including the proposed 20% levy on EU goods. So they're on the other side, they're making moves. They've been making moves. We're not. I think part of that might have triggered Trump's reaction. He's looking and seeing things happening across the pond. But that just came in today. And then when we're looking at how the market's opening today, we're closing yesterday. S&P was down 2.24%, Nasdaq down 3%, the Dow Jones down 3%. Semiconductors just getting ripped a new one, really. Slammed by the trade costs. We talked about NVIDIA yesterday, their $5.5 billion hit from the export licensing. Want to get into that one, but AMD also projecting $800 million in losses. ASML, as we talked about yesterday, had weak guidance, and Taiwan Semiconductor. They actually reported this morning, and I believe they beat. So they actually had a beat. Their net profit surged 60% year over year. Maybe we can pull up Taiwan Semiconductor and quickly touch on that one, Shay, because I know this is in your wheelhouse. But just real quick, they surpassed expectations. They said there was strong demand for their AI-related semiconductors. But they also, again, expressing concerns about the impact of tariffs on trade policies. All of this, you kind of called this yesterday, Shay, with the semiconductors. It's just a lost year. What are you seeing when you look at Taiwan Semiconductors and then this trend overall?
Yeah, so I actually really like Taiwan's print this morning. I believe that the political risk narrative is somewhat outdated. Like, yes, tariffs are escalating. The H-20 chip ban is somewhat worrisome, but you heard this morning in the print, like there's no impact. There's zero behavioral change from customers. There's no pull-ins. There's no cancellations. So I think there's a reason for why they're not really seeing any kind of behavioral changes. AI demand is not discretionary. Like, this is a structural shift we're seeing in the world that is going to continue their momentum in the fourth industrial revolution. So it's a lot more like it's less cyclical because of the reality of today's world that we need AI and we continue to have to accumulate and progress that in order to become more efficient in society, get all the tools necessary, etc. So I don't know. The marginal, I do think that their guidance was really encouraging. You saw their margins clearly beat, and their Q2 guidance was a 13% sequential increase in revenue, and their full year growth was, I think, targeting the mid 20%. So, like, I do think that we're seeing good news that this tariff war might be just a speed bump. It's not going to be a real headwind. So I love to see that from TSM and even ASML. Like, it was a good print. It wasn't great, but it was a good print. It's just TSM is the manufacturer. TSM is like the gatekeeper of the post CPU era and wafer era. Like, they are essentially like Nvidia, Apple, AMD, Amazon, and Meta. Like, all of them are essentially threading their next gen product roadmaps through TSM's process pipeline. So it's not because of price. It's because there's literally no alternative. Like, Intel can't meet the yield. Samsung really can't guarantee the supply. That it's a mess over there as well. Like, so when TSM, like, you hear TSM expanding to Arizona, like, it's because there's so much commitment towards the demand that they are offering their packaging that they just don't have to care about the ROI because they know the demand's there. They just need to create more of these fab sites. And I think that it was really encouraging this morning. Like I don't know what the stock's actually doing. Let me see. Um, Semiconductor. Let's see. TSM. Oh, it's green. Yeah. See, it's green 3%. If so, that's encouraging to see. But yeah, I mean, we have a narrative headwind. There's
Hmm.
an anchor on any kind of like TSM is probably a great symbolization of what this earnings cycle will be. That was a very strong print, only up 3%. The narrative headwind is anchoring any kind of gap ups in earnings, and I think that's going to be kind of the status quo until this East versus West tariff war is kind of solidified into like, all right, this is our range. We have a negotiation, redeal, we're good.
Yeah, and they also denied any involvement with a joint venture with Intel. Can you
Hmm.
quickly bring people up to speed? What was that? What was that, a rumor, or was that something that fell apart? And what did they say on the call today?
So on the call today, legit, let me see, the verbatim was, I posted it. TSM said they're not involved in any joint venture discussion with any company, aka Intel, on licensing or tech transfer. So the reason for that is, I mentioned like earlier in my spiel that Intel doesn't have the yield to essentially fulfill the AI demand necessary for Foundry. They missed their opportunity, either wrong initiatives, poor corporate governance, or just they didn't have the talent in place. Either way, TSM is the golden child of what Intel was hoping to become for in America. They couldn't figure it out, so now TSM, like Trump wants to make American AI. So how do you make American AI? You need a domestic foundry presence. TSM is clearly doing everything right on the other side of the world. Yes, they have some Arizona plants, so it's becoming more domestic as well. But like, can you help Intel out? Because like they have the bones, they have like the pieces there. Just can't figure out how to orchestrate it in an efficient puzzle or efficient way. Please help them out. We'll give you a specific stake in Intel, so it's worth your sweat equity on helping them out. And TSM said no, like we're not doing that. It makes sense. Like I get it. Like TSM was somewhat like, why would we help our enemy out or competitor out? Like this could be, yes, we'll get 20% ownership. But like really, we have a monopoly right now. I don't know if that 20% membership ownership is like juicy enough. The only way to do this again is brute force, unfortunately. So maybe Trump twists TSM's arm, like do this, help me out, or I'm gonna make your life a little harder. But also, like, I don't think he's gonna do that because have he wants to hurt the East more than American AI. And in order to hurt the East more is take Taiwan's packaging, make it domestic, and help American AI out and be less reliant on the East. So tricky balance, but I I would not like to see that if I was an Intel shareholder. I'm shocked that Intel's only down 2%, but
Yeah, I
maybe they
just popped
pull it
and looked at
down.
that. Yeah, I think what you said is interesting. Like my brain went to, oh, couldn't Trump just do something to kind of force their hand? But I think you're right. There's a lot of these like gray area complexities. I just read this morning that Jensen Huang made a surprise trip to Beijing to try to smooth things over, and I'm like, that's that's not going to go over very well in the White House. But you're right. There's these conflicting objectives from like a national U.S. centric point of view, and then just like good business continuing to grow for shareholders. So he's out there trying to smooth stuff over, but I mean the policy changes are what they are, and I think that's going to be an interesting one because again, this all feels very dramatic. Like he's going behind Trump's back, and now he's like meeting with the like it's
It's
fascinating.
mistressy. Yeah, it's
Yeah,
very
like
mistressy.
I you just know that was gonna set people off too. And now he's gonna have to like smooth things over here again. But it's interesting because I don't know what that conversation's gonna be like because it is what it is with the licensing. And I don't know how they're gonna create a workaround for that.
I mean, this JP Morgan dropped a note yesterday saying that these new China export restrictions could hit Nvidia by 10% this year, their data center revenue. That's a massive hit. That's $16 billion we're talking about. So imagine just all of a sudden, like, you lost 16 billion in a year just because of some macro poker play. That would sting, especially for Jensen. And Nvidia has already so many narrative headwinds regarding DeepSeek and like, oh, train data has become cheaper and cheaper. Your hardware side of the business, gross margins start demising. Like now add a top line deceleration as well on top of a margin compression. Very difficult combination that can cause a lot of fuel onto the fire of like, is this a cyclical business or not? I'm part of the camp it's not because of CUDA, but this is all lining up to being the perfect storm of like, you're a cyclical hardware company and you're gonna get punished for it. I disagree with that, but all this stuff is strengthening our arguments, and I think Jensen's trying to get ahead of it for sure. And it's just really bad timing on everything that's happening, especially as an Nvidia shareholder. And I think the stock's gonna be in digestion period for quite some time because of it.
Yeah, it is also reported he is meeting with DeepSeek officials as well as Chinese officials. Fascinating stuff out of that front. There's also some news dropped this morning from Eli Lilly, and they are seeing some green today because of it. Their oral weight loss drug, it's called orforglipron, I think, orforglipron. They released results of a clinical trial. This is an oral pill you're taking, not the injectables, which makes it easier to ship. It makes it cheaper to produce. It's easier to scale. Not as effective, apple to apples with the injectables yet, but quite effective. But their trial showed up to 8% weight loss, blood sugar reductions, and importantly, no liver safety issues. If you all recall, Pfizer had some bad news a few days ago. Their similar program that they were running, they had to actually pause because it was causing some liver problems. So they're announcing they're trying to seek global approval by the end of 2025. And this is big news in this space because, well, as I said, the shipping cost, the cost of production, and just the overall accessibility just goes through the roof. And they would be the first one to do it in this way. So they have quite the head start there. What do you think of this? You know, the weight loss drug opportunity, the TAM there seems very, very big. And is this something as an investor, Shy, you're watching, or do you think some of this stuff is, I don't want to say priced in, but is it too late to catch this wave?
I don't think it's too late because like the obesity is a huge market, and I think it's going to continue to dominate over the next decade. I just I don't Eli Lilly isn't my play for obesity. Like my favorite play is Viking Therapeutic, VKTX. If you recall, like again, this is the 13-week data point that they I think revealed today. Correct me if I'm wrong, or is it 40 weeks? I think it might. Let's see.
40 weeks.
Yeah, it looks like it's 40 weeks. Wow.
Yeah.
So I do want people to recall like Viking did have better data than Lilly at the 4-week mark, and we're gonna get their more data on Viking's oral later this year. So I think that's a name where I'm really interested on because Viking is getting punished due to the biotech sell-off, clearly from this correction. However, like they have the best in class data already for obesity, and I think that they already have their manufacturing figured out through partnerships. Like their scalability is there, and it's like $2 billion. I don't even know what less than $3 billion market cap. I think they're going to be acquired for a juicy premium eventually, or maybe not, and they actually become this obesity winner. Who knows? Because they have that manufacturing agreement. Either way, like this is my play in my small cap portfolio for GLP and obesity, and I think there's in the 20s is I think it's very undervalued in the 20s, especially with if it was at $100 just like 4 months ago, or when it's $80 just in October. So yeah, it's my speculative position, but I think it's selling off today probably makes sense. Lilly had really strong data. Now they have to back up their oral data later this year to match or exceed that. If not, it might be dangerous to own actually.
What kind of company would view them as an acquisition target? Would it be as simple as a big pharma company that is way behind on this stuff and just needs to quickly
Totally.
catch up? Okay.
Pfizer gave up. they
Okay.
waved the white flag recently, I think. So Pfizer
Interesting.
being an acquisition, and honestly, just spend 10. It's gonna be less than 10 billion to get the best in class obesity drug in the market. If you're big pharma, that's literally nothing,
Yeah.
nothing. But for Viking, if you're a shareholder, it's under $3 billion market cap, so that's a 3x for you. But it's a win-win scenario. It just depends on Vikings management if they actually want to sell out or not.
Interesting. Yeah, I didn't even have those guys on my radar. That's definitely interesting. Let's flip over to let's go over to big tech real quick because the Meta court case is ongoing. They have earnings coming up, leaving a couple of weeks. We're learning some things anecdotally. There's some tea being released from the court case. A couple things that of note that the reporting out of the trial. Zuckerberg is obviously defending the purchases of Instagram and WhatsApp. He's saying they made the platform stronger and more profitable. Obviously, that's his job to do so. He did push back on monopoly claims, and he's pointing to TikTok and YouTube. And there was a slide that's going around that basically shows the user interface of Instagram Reels, YouTube Shorts, and TikTok, essentially saying these are all the same thing. And some people are saying it was like an incredible cell phone to just say like everyone's copying each other. And obviously the Reels really got a lot of inspo from TikTok. But I think that's interesting to watch. But the FTC is saying that Meta bought the rivals with the sole purpose of killing threats, and wants to split Instagram and WhatsApp off. So this is an overhang. This is in the backdrop of their earnings coming up, and we talked about yesterday. Like really interested to see. I know both of us are what their ad revenues look like for Q1 and outlook for moving forward. I think that's going to be interesting to hear him comment on that and maybe even speak to what's going on in court.
Yeah, so I think their argument for Meta being a monopoly is stretched, especially because like there's competing products like out there, like YouTube, and YouTube's a real thing, and same with Google on like competing for consumer eyeballs. So maybe if this was 10 years ago, there might be a stronger argument, but now it's like it does have somewhat of competition. So I just think splitting up Instagram and WhatsApp, I wonder if there's some kind of national security angle on why they're trying to do that. That's the only way I can think about like arguing that they need to be split up because WhatsApp is just so, both honestly are so popular in the world that there might be some uh national security and encryption of those apps. Either way, like Meta's a name that I've been wanting to own. And if I do own this name, I'm going to be cutting all my pure ad tech plays to add to this name. It's run up. It's significantly. It's just I'm waiting for that. I love adding names where there's a narrative disconnect between actual performance and what the stock is doing. Like narrative follows price action all the time. However, like I like to buy things when like the market's pricing them with too much FUD, and like this is not thesis breaking and or cracking. So like now like you see, oh, it's from 740 to 500. Like you don't want to add it. Like that's a significant dip. You're right. I think ad tech names have been over earning the past year or so. So I think a lot of the forward estimates and ad is going to get revised downward, especially in a recessionary environment, which we are in a recessionary environment, even if we're not in an actual recession. The psychological effect towards enterprises and consumers from tariff war is absolutely recessionary. So I think that's going to get hit hard in ads. So I'm waiting for like Meta's actually one of those names where like I can see any revisions downward, ugly 15 to 20% gap down. That's what I'm waiting for, like the under 400 price to see if that happens and I capitalize because everything Zuck's doing for the consumer side softening maybe temporarily on the speed bump, but the infrastructure side is absolutely widening and hardening, and they were right to create their Llama as an open source from the get-go because that is the way it's going to be. LLMs become a commodity. It's going to be open source essentially, and they knew that from the beginning, and they have the best product out there in my opinion, best positioned LLM out there, and they also have a monopoly right now in AR and VR. Sure, Apple might try to create a new version of their F up, but I have no faith in Apple actually conquering any innovation. So I think it's Zuck's world, and yeah, I will be looking to add if we get if honestly, if we're below $1 trillion, it looks like if it's under $400, that's like almost under 1 trill market cap. I'll add.
Yeah, you brought up the wear. I forgot they have the deal with Ray-Ban with the glasses.
Yeah.
I had actually have a couple of friends that have them. But like this has been tried so many times, but I think the way they approached it was probably smarter. Like if you've been around the block for a while, you remember Google Glass, which was like epic fail. I think that was like 2008, 9. And then Snapchat sold spectacles. I actually bought these back in the day. They were selling them out of vending machines, but super fugly, like really just not great. And these glasses look legit. They look normal. I think I saw there was a like some sort of a celebrity encounter gone wrong because it was captured on these, and the person didn't know it. I think it was Zach Bryan. But yeah, I think that's an interesting because they did append to a classic brand for those. Is that when you say AR, VR, are you talking specifically wearables or even just beyond that into other things?
Wearables, but also I think B2B is the next level of where that world's going. I think B2B is going to get the ChatGPT moment for that will happen in B2B before B2C. And I think B2C will follow that. I think AI agents, you're going to be able to interact AI agents in a virtual environment and it's going to feel like people, but really it's an AI agents. That's the kind of world I think is going to be like the ChatGPT moments where for enterprises of like, wow, like I don't know if this person's an AI agent or a human because we were living in this virtual AR world where everyone's an emoji. That's the point of the how disruptive AI agents will be. So like I think they're going to conquer that because it's just a lever to pull for efficiency as an enterprise, and maybe people don't have to come to work. Commercial real estate will be lower and lower, and like they'll save them money on capex. Either way, like I think Meta is way ahead, and B2B is going to be the first like whoa moments. I'm still waiting for it, but that's my vision for that space.
Yeah, the past few years, there's been some startups trying to do AR, VR for B2B, and the applications make sense. Medical training, I mean, any kind of training, really, simulations. There's so many applications. I think it is a question of like who's gonna break through and make it the most affordable and accessible.
Well,
But yeah, a lot of people have tried and they're still trying, but maybe Meta will be the one to figure it out.
well, it's looking for a problem to solve. There isn't really that much of a problem to solve right now. That's why you don't sense the urgency to adopt it. Uh, and yeah, it's the same thing in blockchain. Like blockchain is really interesting tech. It's just it's looking for a problem to solve. Like there isn't an urgency yet, and that's an anchor on both of those sectors like progress.
Yeah. I want to go back also to something you mentioned. 'Cause I thought was an interesting framework of thinking about things that are like narrative violations in terms of the promise of the company. Do you have off the top of your head like any other examples that kind of follow that framework that you're interested in that the narrative out there? I mean, would TSM fall within that framework for you?
Like a disconnect from narrative and like
Yeah.
actual performance. Yeah, I think TSM is definitely one. I think Snowflake, for the past year, was the narrative was AI will cannibalize them as a data warehouse company, but I was like, no, like they're gonna leverage their data and becoming the data backbone of enterprise AI. Like it's a very easy transition, and you saw that 2 quarters ago, and they've like been catching bids. Yes, they're fading because of this market's fading, but like that narrative reframe is happening right now. So that's Snowflake's one of those. I do think MongoDB is another one, but it's a longer shot. So there's definitely names out there, especially in the software space, because the AI tsunami is coming. It's going to cannibalize that space, and because of that, there's a lot of FUD and a lot of the software names that probably are a little excessive, and like really they're going to have a really important part of the modern AI tech stack, and they might be priced otherwise, especially MongoDB. Like they're just getting destroyed.
Yeah, I love that line of thinking. It gives people something to action on. Shai, I know we gotta let you go. So I hope you have an amazing long weekend, and we will see you on Monday. And stick around because we have a special guest popping in. But Shai, thanks so much. Appreciate you as always.
Thanks. Have a good weekend, everyone.
All right, guys, we are bringing in a community MVP. He goes by the name of Doji Dad. You might know him as John, dialing in from Michigan. What's up, John? How's it going?
Hi, Katie. How are you doing?
I'm good. What's new with you over in Michigan? How's the weather? How are things?
Michigan is the best place to live in the country because we don't have any hurricanes or fires or anything like that. And we're
Yeah.
surrounded by water, so it's beautiful.
Are you a Michigan State fan or are you of M? Like, who's your football team?
Um, I prefer not to say because both I have friends on both sides, but it's Michigan.
Okay. Yeah. I went to Notre Dame.
Oh,
So, but I don't see you as a sworn enemy because I went there, but I would say I'm not in the cult. I have a unbiased take on things, but I remember my first game I went to in college, we played Michigan, and it was so much fun. Just such a
yeah,
good love fall in the Midwest.
yeah.
But we know you are here to talk stocks, and we got some charts we're going to go through. And I'm really excited to talk to you because Shy and I, we really focus on fundamentals and themes, and that's kind of where my brain operates at. And you're more into the nitty gritty. And so I'm going to have a lot of questions for you, but I think hopefully they're questions that people listening also have. And also, guys, I'm in the chat. If anything we say doesn't make sense to you or anything like that, this is going to be a little educational session as we roll in to the long weekend.
Yeah,
So does that sound like a plan?
it sounds like a plan. Reading charts is just one piece of the total puzzle. And the whole idea about reading charts is taking out a lot of the volatility. And one of the things that you had earlier this week, you were talking to Brett from eToro, and he was saying there's not a lot of influx of new traders since 2020. And I believe you mentioned that they're used to volatility. And the whole idea is to try to get that volatility out of the market. And if you can understand basic chart principles, you can really take a lot of that out and make educated decisions. So I've got three charts that we're going to go by, and we're going to look at just the basics on how to read a chart and how to put that into your process if you want to.
Awesome. Let's start with USAR.
USAR.
This was
So this is
trending earlier this week. There's people talking about this one.
yeah, it's a rare earth play. So when I look at a chart, the first thing I look for is momentum. I'm a momentum trader. And so I want to find where the momentum starts and where it ends. So if you look in the middle of the chart, you'll see positive momentum, which means I always start with the 5-day exponential moving average, which is the green line, and the 10-day simple moving average, which is the yellow line. Whenever the 5-day crosses the 10-day, momentum is changed positive. That's when you start looking for buy. If you look to the left of you'll see the negative momentum where the 5-day crossed below the 10-day. And you never want to take a position in negative momentum or add to a position because it's just going to go down until it crosses back into positive momentum. So on this chart, the green line crossed above the yellow line, so it's in positive momentum, and now you need a confirmation that it's actually a buy. And the confirmation came 2 periods later when you had a bullish engulfing candle, which means the body of the green candle completely encased the body of the red candle with VOT, and that's your buy signal. So you would have taken a position right there around 850, and as long as it trends over the green line, it's in positive momentum, and the trend's going to go up. If you just look at the mathematics of a 5-day exponential moving average and a 10-day simple moving average, if a stock is below the 5-day and the 5-day is below the 10-day, you can't have an uptrend. It's mathematically impossible to have an uptrend. So once you take a position at that bullish engulfing candle, and as long as it trends over the 5-day, it's going to keep going up. Now, the RSI and MACD are below it, and those are just ways to look at the strength of a trend and the momentum of a trend. So you see right after the bullish engulfing candle, there was a trend line. There was 2 red candles, and you would think that, okay, it's going to go down. But if you look right below the RSI, the trend strength is telling you no, the trend is still strong, and the momentum is still strong. Those are going up, so you wouldn't get rid of your position, just stay in it, and then just follow the green line up, and I believe it's up again today. So as long as it's trending over the green line, and the green line's trending over the yellow line, the uptrend's intact. and it'll continue to go.
Interesting.
One thing I want to say about negative momentum is you can see where it started to go down, and after each moving average it crosses, it's just going to go down further and further. So you just don't want to take a position in a negative momentum, and you don't want to average down in negative momentum. It's just not a good idea.
Yeah, what is the difference? Can you spell out the difference between trend strength and momentum strength? What are those? How are those measurements different?
Sure. The RSI measures strength by price. So there's a formula that takes the closing price against the opening price in a certain period, and it measures the strength by price. So if you have a strong RSI, it means the price is going up. The momentum is based on moving averages, and it's more like a flow of the trend. So if you have both the momentum strength and the trend strength, you're going up. It's going to support it, and you'll see when we get to another chart where it shows you ahead of time things that are going to fall.
Okay, interesting. Let's jump to the next one. I think we have Palantir, another fan favorite in the community.
Yeah,
What are we looking at here?
So if we look at the far left and you see where it went to negative momentum, that's when the 5-day crossed below the 10-day, 5-day EMA crossed below the 10-day SMA. And if you look straight down below at the RSI, the same thing happened there, and the same thing happened at the MACD, which confirms this is a downtrend. So you just follow the green line, and you'll see the price is below the green line, and it just keeps going below the green line, so there's no buy signal. And then you'll see where it turned into positive momentum. The green line crossed above the yellow line, and you can see that in the RSI and MACD are confirming that that's what's happening. So that would have been your buy signal at 86.24. And then you would just follow the green line, and as long as it's above the green line, and as long as the 5 days above the 10-day, it's a buy. But you can see where there was a sell signal when it fell below the 5. And if you look down at the RSI and the MACD, they're just flattening out, which is telling you that this isn't going anywhere. That would have been your sell signal around $90. And then you just follow it, and you just follow it. So as long as it's below the 5-day, it's not going to uptrend. And you just wait until it crosses again above the 10, and there's your buy signal at 85.56, and I believe it's up still today. So as long as it's trending over the 5-day, the uptrend is intact, and you're good to go.
Yeah, and so I don't day trade. I'm not in these charts as often, but if someone's doing this, are you looking at this chart all day? You have to be pretty keyed in, right? You can't look away for too long.
Yeah, well, this is the daily chart, and I don't day trade either very much, but you can look at the minute chart and read it the same way. If you look at a minute chart, you'll see crossovers, and you'll see all the things that you would see on this chart, you could see on a minute chart, and you could trade, but I don't have the patience to do that.
Yeah, yeah. And then my other question just generally is the math of this, the mathematics and the statistics behind this is fascinating. What would cause, when you're following all these principles you're laying out, what would cause that to just go out the window? Some sort of exogenous situation or a macro? Like what would cause the math just to break down in a way that you might not expect?
Any catalyst, any tweet, it can happen pretty quickly, like NVIDIA. So yeah, I mean this is just one way to look at the chart, and the whole idea of this is it just takes out the volatility. So between the crosses, between the positive and negative momentum, you can get a lot of news, you can get a lot of stuff that just kind of throws you off for a loop. But if it's trading above the 5-day exponential moving average, and that's above the 10-day, because the exponential moving average is a weighted average, so it's weighted towards the 5th day, and then it goes down. And the 10-day simple is just a simple average. So mathematically, you can't have a sustained uptrend if the 5-day is under the 10-day, which is 5 periods.
Yeah, I like that. It removes the emotional layer from things.
That's the whole idea. Is so if you have this on your chart and you get some big catalysts or something like that, just look at it, and if it's still above the 5-day, then the trend is still good.
Wow. I'm learning so much. Let's flip over to the next chart we have, which actually we have two more charts, but they're both the same company. So let's start with this chart for Apple. What are we seeing here?
So Apple used to be, you could trade Apple up and down all the time, and it's a little different now. But you can see where it reached negative momentum, and the 5-day went under the 10, and that's when all the tariffs were announced and stuff like that. And then Trump said they're going to take off the tariffs, and you can see that big green candle. That was the day that he said that. So you would say to yourself, is this a good time to get into Apple? And there's two ways to look at it. Apple's going to go up eventually anyway, but you want to get the best price. But you can see the trend is going up, but the RSI, the volume, and the MACD are all going down, and that's called divergence. So if that means it's not supporting an uptrend. So the price is going up, but everything else is saying this is going to go down eventually. And as you can see, the last three candles have started going down. I don't know what it's doing today, but I just want to put an example of how volatile something like this could be. So if you're looking to get into Apple and you see that big green candle, but you see the divergence and you don't know if you want to get into it, on the next slide, I'm going to show you another way you can look at it.
Can we go to the next chart? There we go.
So
Okay.
it's always good. It's always good to, especially if you're swing trading or day trading, to look at the minute chart. So if you look at this is Apple over the last 3 days. So Monday at 9:30 on Monday, that was its peak. If you took a position in Apple any time during the day, unless you're day trading, you're trending down. And Tuesday, same thing. Open high at 9:30, trend down all day. Wednesday, same thing. So if you're just swing trading, anything after Monday was pretty much a downtrend. So when you have a stock that's really volatile or there's a lot of news around it, you want to kind of go 30,000 feet out and look and see what exactly is happening with it as a trend wise. So you know that you don't, or at least I wouldn't want to get into this until it started breaking some trends, which would probably be around 208 or whatever. I can't read the numbers. But the point of this slide was to say always look at a second time frame when you have a lot of volatility.
Okay, interesting. And then, so the trend, the divergence, is that happening because sort of like knee-jerk emotional reactions to news in the moment, and it's not actually lining up with the math that's been leading up to that trend? Is that
Yeah,
what's causing it?
exactly. It's the strength of the trend, and there's a formula they use, but the strength of a trend saying, you know, we're not really comfortable, we're not sure that this is going to continue to go up. If the RSI and the MACD were heading up at the same time, then that's when I would look at a position because it's supporting an uptrend.
Yeah. And how do you pick which stock, if you're just getting into like this sort of strategy, how do you determine which stocks or tickers? Because it seems like this could apply, because it's math, it seems like it apply to a lot of things. So what's the thought process?
Yeah, so in the morning I open up my platform and I go to my watch list and I sort it by percentage change, and then I just start going down the list and finding the right setups, and probably, you know, I probably post 20 to 30 charts a week, and probably 15 to 18 of them don't ever do what I think they're going to do, but I'll set entry points and say this is where I would start to look for a position, and if it hits it, it hits it. So, and that's what I do, and I just go through, and then I have watch lists for everything from crypto to gold to whatever, and I go through each of my watch lists, which you can see on the right-hand side. I go through each of my watch lists, and I just go through them one by one and see where, what's setting up. I always look at where the 5-day is compared to the 10-day on every chart, because that's going to tell me momentum, and if I can see momentum setting up, and you know, this is kind of the basics. I don't have on here all the resistant lines and support lines and all the other things that go with it, but this is just the basic way I start looking at a chart is trying to find out where the momentum is and what the structure of the chart is. And the structure is the RSI, MACD, volume, a few other things. And and I just posted something the other day about Clove. I closed my position because the whole structure of the chart was coming apart. And people are going, no, it's got a $12 price tag, it's all this stuff. And I said, no, it's the structure is not there. And next day it went down. It just was not there. So it's just really understanding the momentum, understanding the structure, and the support technicals that are taking it to, taking it up.
Yeah, and then so when you're going through and you're like filtering, and you mentioned like a good setup, are you going by like highest percent change day over day, like most volatility?
I am. I'm going highest percentage change. I usually don't look at something that's gone up 100, 200% or something, because that's usually just a pump and dump or whatever. But I do. I start at highest percentage of change, and then I usually start around 15% and then go down from there. And then I check Stocktwits and see what's trending, which is always helpful. And then I go through all the trending and find things that are there. It's really just kind of a hunt and peck thing. I've been doing it for about 6 years on Stocktwits, and I have a watch list of about 100 tickers every week that I run through and delete ones and add ones and modify ones, and it's really a full-time job.
Yeah, fascinating. And then so if you're making a bunch of trades in say a week time frame, how do you determine allocation across those? Is it all you're placing the same bet dollar wise on each, or you like some you're like, okay, I love this chart, I'm going to put more? How do you think about it that way?
Well, you have to look at the chart. So if you have the 5-day cross the 10, you have momentum, that's good. But if you have a lot of resistance above it, you want to be careful. So if you have like the 21-day, which is called the pivot moving average, or the 50-day, if you have those layered on top of it, then you're going to take a smaller position. And each time it breaks one of those resistance points, you can add to your position. If the 5 and 10 break over all the other moving averages with volume, then you're going to take a bigger position. So it kind of just depends on what the chart's telling you and what the resistance lines are telling you.
Fascinating. Well, what are you going to do the next 3 days with nothing to trade? You got any Easter plans?
Yeah, well, I'm gonna usually Saturdays I go through my watch list and get all that stuff together, and I put up some charts on Sunday. So I won't be doing that Sunday, but probably Sunday night. But yeah, I'll find something to do, or I'll read. I read a lot on Japanese candlesticks, trying to learn that.
Yeah, we were talking about you, former bookstore owner. That is very cool. What kind of books do you like reading outside of financial stuff?
Oh, mostly biographies, 70s rock groups.
Oh, we could have a whole show about that.
Yeah.
I am a big Allman Brothers fan.
Nice.
My mom and I have a long-running inside joke because her most passionate position is she thinks Michael McDonald ruined the Doobie Brothers. And she will tell anyone. I don't know if you have hot thoughts on that, but she was not a fan of him joining the Doobie Brothers at all.
Well, I don't really have a thought one way or the other. I thought he did a good job.
He does have a good voice, yeah. And you must wait. Who's from Michigan? Famously, who's a
Bob Seger,
Yes,
Madonna,
Bob Seger, Night Moves.
Don Henley.
Don Henley's from Michigan?
Yeah, him and Bob Seger used to drive up Woodward Avenue all the time and talk about music. And the Cowsills came on the radio one day, and Don Henley says, "Turn that shit off." No, Glenn Fry. I'm sorry, Glenn Fry.
Glenn Fry.
Turn that shit off. And Bob Seger says, "Hey, they're on the radio. We're not. Let's see what they're doing." So,
Whoa.
they used to hang out.
Yeah, one of my favorite Bob Seger songs is Still the Same, which kind of has trading connotations. Wow, what something in the water in Michigan. I love that.
Yeah.
All right, we'll have to do a second show for people who like classic rock, and we can just do full deep dives. But John, Doji Dad, everyone, if you're not following him, obviously there's a lot to learn. I learned a lot. I know what I'm going to do Saturday. I'm going to set up my watch list on Stocktwits and dig in. So appreciate you and appreciate just the way you broke it down. This was super insightful. You'll have to come back soon.
I will. Thanks, Katie.
Okay. Everyone, have a great long weekend. Obviously, the market's closed tomorrow. We're off. We will be back Monday morning at 9 a.m. Stay safe, and we'll see you then.
Bye-bye.